Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about a company called DataDog. And DataDog is a company that deals primarily in cloud-based software and security. And they recently, as I'm sure you may have noticed, they partnered with Microsoft, and this is a big deal for them. The reason that this is such a big deal for them is because Microsoft is huge on IT security, particularly with their Azure cloud-based platform. And they skyrocketed higher based off of the fact that that happened. Yesterday they had about a 12% indicator, and today they're up another 1%. So they were trading from around the $88 to $92 range. You can see here again the $92 range. This is a stock that we've traded previously, and you can see that they have exploded upwards this calendar year. So watching yesterday, they did really, really well for themselves based off the announcement of that partnership. And I think that that is something that is going to continue to pay dividends for them in terms of share price. So the reason that I'm highlighting this particular stock is that I want to showcase the plays that we made and how to play stocks when they have these big run-ups. And the way that we're going to do that is I'm going to go to the transaction history, and we're just going to look at just the past day. And you can see that I've been pretty busy. But the first thing that I want to highlight is these DataDog contracts. You can see that I actually did not hit the boat, or I did not hit it as soon as that news was announced. You can see here that I did purchase the DDOG contract for $265. And the reason that I still went after this even after the original run-up is because I still saw a lot of opportunity in the stock, and I thought that it was going to continue to go higher. At this point in time, the stock was about $97, and so that's why I went after it and said, hey, I'm going to go for that opportunity. One thing that I didn't do is this contract eventually was worth $900, but I could not sell because I didn't want to get dinged for day trading, and I had already used up 3 day trades to that point in time. So rather, as the stock was going back and forth, what I ended up doing is I continued to buy and sell other options during the day to try and lock in some of the upbeat momentum. Instead, what I did is today I sold that DataDog at open because it was pretty expensive. And you can see there that I did it for $382. So that $382 compared to the DDOG move up here. So overall, I was up about $120. However, the stock then dropped. You can see that I then bought a call again because I still believe that this is a good investment and I wanted to go after it. And so as it sold off, I purchased a 104 call, which this was a new option. So the 104 was a new option, and we'll show this on the Thinkorswim web platform here momentarily. But as it continued to drop, I averaged in, and I averaged in. So all in all, I bought 3 different call options, each one lower and lower. So this is me averaging down because I still saw an opportunity, and if I thought it was a good deal at $265, I definitely thought it was a good deal at $230 and $215. Then, as the stock started to go up, what I then proceeded to do is sell those options back. So my original thought process was I did want to sell 2 of them for $355. And the reason for that is because that would then leave my third option for free. So you can see that I sold 1 at $355, so that was the plan. However, I canceled my second option because it kept going up. So I was able to sell the other one for $420, and then I was able to sell my last call for $359 or $360. So what does this actually look like? So within the Thinkorswim platform, as you can see here on the screen, what actually happened here is as I sold those, or rather I sold my initial contract here at the beginning of the day. As they started to sell off is when I sold, so I was on this red candle here when I sold. I bought 3 more, and they continued to do some of this during out the day. And then as it went up here is when I sold my contracts. So I was able to actually cash in on that option. And what that looks like for me now is this chart right here. So the worst case scenario for me is I can make $425 here. And again, this is an option that expires next week. So this doesn't matter if the price is $10. It doesn't matter if it's $90. This is going to be what I end up with is a $425 profit. You can see that the total liquidity right here is $105 because I've already captured a lot of the gains that would come out as a result of this. So this is the difference between if this $105 went down. On the inverse side of that, my max profit is capped out here at $725. So if this goes to $110 to $180, it doesn't matter because the maximum here I can get is this $725. So what I'm doing here is making that hedge bet where I can both capture the top side and the bottom side of that play and still be able to make a move here. However, I was very busy today. I do want to highlight that again, whenever I do really well on this account, what I'll do is I will move that money over to the savings account. And as you can see, 85 shares of Pfizer here. And over here, I've got 15 shares of Pfizer that I've already planned to sell back. So what I'm doing here is I'm selling Pfizer, or I'm going to have this 15 shares get moved into this account, and I will have 100 shares where I will be doing covered calls. So expect that to be happening anytime soon, and I'll probably do a video over how I'm going to be using those covered calls, because the idea there is going to be use those covered calls to purchase additional shares of either Every that you see right here, or one of my other favorite stocks, FTAI, although I'd like to see the price on both of those go down a little bit before I make those moves. So all of that being said, that's what I'm looking for. That's what I did today. And what I'm looking to do whenever we see positive news like that is wait for those candles and make the move based off that up and down sequence. So if I go to a 3-day contract like this, again, it's going to be a little bit more difficult to see when it's on the 15 minute. So let's see if we can dive in here a little bit. On this 5-minute candle, so I purchased all the way up here. So again, I did not catch this on the beginning, but I still knew that it was going to go up. I paid for a premium and it paid off because I was willing to take that risk. However, whenever you have a really good solid first day, generally speaking, you'll see this sell off based off the broader market or just based off this fact that the stock was up 12%. When you see that move, that's a potential entry point, and that's when I like to buy in and then lock in the spread there. Even if I think it's going to go out, I like to lock in the spread because there's always time decay, there's market events, there's a lot of different moves that can happen here. So with everything going on, I like to take profits and lock them in, especially when you see something like this happen where, hey, we had a solid up momentum. I still believe in the company. I believe in the thought process behind it. I want to buy in to that move. So this is something I think is going to continue to present opportunities, because what we're going to continue to see is a lot of partnerships as we continue to see some winners come out as a result of the coronavirus. So that's what I did today. That's how we hit a solid win on this account. You can see that this is a relatively small account. It's only about $1,300, but that's after having a massive day. So thank you for watching. I appreciate all of you. If you have any questions, drop them below. If you have some plays, drop them below. If you found this content helpful, please leave a like and subscribe. Thanks, everyone.